Hello and welcome to ATFX. My name's Nick Twydale. I'm one of the Chief Market Analysts. And today we're going to give an update on the thing that's really moving markets. It is the longest shutdown in US government history, and hopes are high that it's about to come to an end in the next couple of days. So we are well over 40 days into this recent US government shutdown. And of course, for us in the markets, it has meant a huge data vacuum for all of the US data that we normally use to give us a very strong indication on how the fundamentals are going for not just the US economy, but generally for the world economy. So great news that's come out starting on Friday. It's come out a little bit further over the weekend. And yesterday we got the first movement, I suppose, that we've been looking for from the US government, which was some funding has got through the Senate. It's still got to get through Congress and then get signed off by President Trump. But things are looking favorable and markets have reacted very strongly on the back of it. But what we're going to have a look at today is just what that means for us, for traders in the future, and just have a look at a couple of potential trading opportunities across gold, euro, and dollar yen. So first up, likelihood is we do get through. There's a relief rally. How long that relief rally is does depend on market sentiment. As I said, there had been jitters. Also, the big thing for markets and markets players is we want to see a return to that data. We want to see a return to certainty that we get. Probably most of the stock investors will be looking to see that we're going to get data that backs up a further Fed rate cut in December. Now, we're on the 11th of November today. We've got mid-December's the next Fed meeting. Is there enough time? Probably. Still pricing in that Fed rate cut, I should say. That could help spur markets to new highs. Longer term, we're actually going to have to see this data. Now, they're not going to be able to come back, the Bureau of Labor Statistics, for instance, they're not going to be able to come back into their offices and just start printing out reports and shell them out. This week, we were due to see that key CPI number, and we were due to see PPI numbers and retail sales numbers. CPI, obviously very important, still remaining sticky, not to the liking of the Fed. We're probably not going to see that by Thursday this week, which is when we would normally be expecting to see it. But we're hoping that there's a catch-up coming in. So a lot will depend on whether we're going to get this data, how the market reacts. Going to be very important. That's not just for the CPI numbers. That's obviously for key jobs numbers. We've missed two massive jobs prints. Non-farm payrolls over a month ago, and then just last week, we didn't get anything. We did get the jolts. We did get the ADP. We didn't get the jolts. We haven't had weekly unemployment claims for 6 weeks now. So it's been painful for market commentators, myself included, because we have such a focus on those US data and what they mean to underlying fundamentals. Anyway, that's the situation we're at. Short term, it is positive. Relief rally, we've seen one already. We probably get another relief rally if it goes through. We've got the small matter of a US holiday today, which will stop things from happening. But we're hoping by Wednesday or Thursday this week that we get the sign off from Congress and then from Trump, and then things will get back to normal. Those updates that come on Thursday and Friday are going to be crucial when we get data and how the market reacts. So I'm expecting relief rallies, and then maybe a little bit of a correction as we then await this data, and then maybe, especially with CPI numbers, and those jobs numbers are going to be crucial. Last week, we got two secondary indicators. ADP came out stronger, which is something that we normally look at quite closely in the market. Then we got the challenger job numbers that showed horrendous decreases and increases in layoffs that really hit the market. Now, we don't normally look at those too much, but we're going to need to see those non-farm payrolls, going to need to see the unemployment rate before people make informed fundamental decisions. So quick jump over to some charts, see how that could affect the market, and then we'll take it from there. But interesting times, it is positive, but for how long it remains positive really will come down to the data. Let's have a quick look at what's happening in gold recently. So here's the gold chart. Very interesting moves as well. Yesterday, as I said, these correlations that we've had that normally exist. So risk on rallies, as I said, Dow up, S&P up, NASDAQ massively up, over 2%. What happened in gold? Up. Nearly 3% on the day. Low at 39.96, high at 41.15. Doesn't make much sense. That's been gold for the last, ever since really we saw this breakthrough in September. It's respected this technical line very well. It kind of messed around here, we had a bit of a range for a week or so where these big moves that we'd seen coming through the last couple of months had sort of pulled back a bit. But yesterday, big breakout above these highs, gold back in play, middle of the range, resistance now coming about 42.35, support now just beneath the $4,000 an ounce level. So gold moving of its own volition as well. Still uncertainty out there. Still feels like some big players, central banks, etc., big portfolio changes. They're still looking to buy these dips. Gold appears to be a buy and dips, whatever the situation at the moment. Let's have a quick look at a couple of the major currencies. So here's our euro chart. Euro's been behaving itself fairly well, actually. So obviously moved up really nicely in line with that dollar depreciation that we saw from way back here at the start of the year. We've come down. I'll bring this into a bit. This is obviously the daily chart. Bring this into a bit more focus. We've come down from these highs just underneath, just above 119, the figure I say. Didn't quite make that 120. Found a base just a few days ago, just under 115. We're kind of in the middle of the range, but it's a nice flag pattern we've got coming in. That is a good resistance trend line on the dailies. Interesting to see what happens if we get up to this 115.84 and 140.96. It has thought to be a bit dollar positive, this coming back in there. The data coming back for us. But once again, I think really for currencies in particular, we're going to want to see that data. We're going to want to see non-farms. We're going to want to see inflation numbers. We're going to want to see those retail sales, GDP, all this data that we've been not getting will give us further moves. So I think for currency traders in particular, it's a little bit of a wait and see. If it does start to move and attack any of these technical sides, one way or the other, then trades will be on. But really, I think from a fundamental perspective, we need to see some of these data moves. Now, quick jump over to dollar yen because that is looking interesting. And here's dollar yen move. So we have seen a good move higher recently in dollar yen. Trading up to this top side resistance trend line, as you can see, big factor here. It's capped out just above the 154 level. On several occasions now, traders, especially in the yen, will be looking for this. Once again, I feel for longer term moves, any break to the top side, I do think it opens the way for a move up to 156 and maybe up higher to these highs, sub 159. But we really want to see some fundamentals from the US side of this equation. Are we going to see a higher CPI print? Is that going to push us higher, pull back rate cut expectations from the Fed? Are we going to see a slacking in those rate hike expectations from the Bank of Japan, new government coming in? What are we going to see from US data, from the jobs data? I think jobs data is key to this one. It has been. That's the indication we've got from the Fed. So next time we get non-farms, the big question for most of us in the market is, are they going to do an interim non-farms? Are they going to do interim unemployment rate data? Are we going to get CPI soon? I think CPI is probably number one on the list because that factors in to a lot of other parts of the economy. But really, I think most of us want to see how those jobs numbers go and if we're going to be able to lock something in. Or are we going to have to wait till that first week in December for what would be a massive jobs print? Hopefully we get some weekly unemployment claims data in the middle of it. Massive jobs print on the 5th of, I think, around about the 5th of December before we then have the next Fed meeting. So that could be huge. To me, though, dollar yen looks like we could see a nice trade on that. Obviously, the bears are looking to fade this move into this resistance trend line. It's clearly a good trend, clearly a good resistance level at the moment. But for the bulls out there, a break higher should see a nice quick break up to 156 and then maybe even extend further. So keep an eye on your charts. Keep an eye on and keep tuning into ATFX. You can, of course, click on the link. That will take you and help you subscribe into our channel. We will be keeping you updated on everything that's going on with this shutdown and more as the days and sessions and weeks progress. But it's a very interesting time for markets and plenty of opportunities out there.